Tortoise Energy Independence Fund, Inc. (NDP), is quite the aggressive option for an income and energy investor. I personally believe that oil prices can continue to climb, but I'm still cautious when a fund has a distribution rate of 14.1%. No matter, I believe NDP could be a small part of an investor's portfolio. NDP invests in companies that engage in the exploration and production of crude oil, condensate, natural gas, and natural gas liquids. The fund is designed to accomplish a few things: access to North American oil and gas shale production, seeking a high level of total return, no K-1s for shareholders at the end of the year, no unrelated business taxable income, UBTI, and IRA and tax-exempt suitability. The fund also utilizes a covered call strategy to potentially generate income and reduce overall volatility. This offers investors a few enticing values that buying an individual energy production company does not. With NDP, you get a diversified group of holdings in the oil and gas production sector. This can cut down the increased risk of owning one company and all the internal issues that could potentially spring up. NDP also allows an investor to skip waiting for the K-1 at the end of the year for filing taxes. Also, with the help of leverage that the fund can utilize, can potentially have outsized returns when crude oil trudges higher. Of course, this can work out the other way as well, which it has since oil prices fell drastically in 2014, affecting many companies and funds in the energy space. An investor looking for large yield and growth potential, NDP may fit that bill. Performance: the fund currently trades at a share price of $12.42, compared to its NAV price of $12.22. This gives NDP a slight premium of 1.64%. This can then be compared to its one-year average of 1.45%. Over the longer term, still at the 5-year average, the fund shows a -6.37% discount. This is quite significant but shouldn't be anything to automatically turn you away from the fund. An investor has to remember that this fund is tied sharply to the price of crude oil, being invested in companies in the production segment. The fund also has an inception date of July 27, 2012, meaning that it did not exist for very long before things went south for the fund. This is very evident when looking at the fund's discount premium chart. Source: CEF Connect. It's obvious to see that when it appears crude oil is going to do well, this fund will then perform well too. So while the fund trades at a slight premium, I see this as not a very big issue because I believe crude can continue to go higher. This will potentially put NDP eventually in a premium area where I wouldn't purchase it, but for now, the premium isn't absurd. Distribution: the current distribution rate at 14.09% should give any rational investor a clue that a distribution cut may be in the future. This still doesn't deter me from seeing NDP as an opportunity going forward. The distribution rate is currently paid out quarterly at a per-share amount of $0.4375. The fund has been able to maintain this since its inception date, but this doesn't guarantee the fund can continue this rate into the future. Source: CEF Connect. From the fund's website, under the tax information section, 100% of 2017's distribution was classified as rock. Source: fund's website. Now, not all of the rock the fund paid out is true destructive rock. The fund has some exposure to MLPs, and when MLPs pay out distributions it is largely classified as rock due to accounting rules. Additionally, the fund utilizes a call writing strategy that is also classified as rock when distributed to shareholders. Distributions to investors in the form of rock lower the cost basis of an investor's shares. This then defers the tax obligation for an investor until they decide to sell the shares. They then pay capital gains on the cost basis. Holdings. Source: fund's website. NDP currently has a large 71% of its assets in oil and gas production. The fact that these companies will correlate with the price of crude means that an investor that invests in NDP better be sure they truly believe in an oil price recovery to continue. This fund doesn't have some of the defensive qualities like the previous Tortoise fund I had covered, Tortoise Power. With a covered call option strategy, this could be seen as a slight defense against volatility on the fund, but in my opinion, this is minuscule compared to the effect the price of crude oil will have on the fund. Source: Fund's website. Pioneer Natural Resources PXD is a company that operates in American petroleum, natural gas, and natural gas liquids exploration and production. The company has recently become under pressure due to the Permian Basin. The Permian Basin currently has a supply glut as producers are pumping oil out of the ground faster than the pipeline companies can take it away. EOG Resources, Inc. EOG is also an American petroleum and natural gas exploration company. EOG operates in all of the major producing basins in the U.S. EOG continues to produce earning beats as the price of crude recovers, and EOG can continue to recover as well. Conclusion: NDP is definitely an interest choice for an investor that may be looking for a huge yield, at a little over 14%, while also looking for the chance of capital growth due to oil prices recovering. I would take note though, however, that this would be for an aggressive type investor. The option strategy the fund utilizes, as well as the leverage the fund utilizes to help enhance returns, should be noted. While the option strategy may help out in some small way to lower volatility of the fund, the primary factor of movement will be caused by the price of crude. This will then be enhanced by the utilization of the leverage, either increasing or decreasing as the price of crude moves. Please feel free to leave any questions or comments below in the comments section. If you like this article, please consider clicking the follow button above to stay up to date on future articles. Disclosure: we are long TPZ. I wrote this article myself, and it expresses my own opinions. I am not receiving compensation for it, other than from seeking alpha. I have no business relationship with any company whose stock is mentioned in this article.